The Consumer Confidence Index, or CCI, is a key economic indicator that measures consumer optimism about the economy and personal finances. Published monthly by the Conference Board, it's based on a survey of 5,000 U.S. households. A higher CCI indicates greater confidence, leading to increased consumer spending and higher stock prices. Conversely, lower CCI suggests decreased confidence and potential economic slowdown, impacting stock, currency, and commodity markets. In Forex trading, strong consumer confidence may lead to expectations of higher interest rates, strengthening a currency. Weaker confidence may weaken the currency. Consumer confidence also impacts commodity demand. Higher confidence boosts demand for commodities like oil and metals, while lower confidence may lead to weaker demand and potentially lower prices. Central banks use consumer confidence to make decisions on interest rates and monetary policy. Strong confidence may prompt tightening policy, while weak confidence may lead to accommodative policies to stimulate economic activity. Traders analyze consumer confidence data to make informed decisions and adjust their positions in response to changes in consumer confidence.